For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
I kind of want to start by talking maybe a little bit about my experience as a developing trader. For those of you who may not be familiar with me, I started trading in like 2005, 2006 timeframe. I literally had never traded before. I didn't know what a stock was. I had no financial education whatsoever. And it took me literally a year and a half to figure this trading thing out. That's not a lot of time, right? Going from knowing nothing to being able to be profitable in the market to the point where I was literally starting to mentor traders within like a year and a half of me starting. And a lot of the people I was mentoring had been in the business for 10, 15 years and hadn't been making money. Now, I'm not saying this to brag. I'm just saying it to just demonstrate how you can do that. I mean, there's really nothing special about me. I don't have a college education. I don't have a financial background, and I can come into trading and I can figure this out in a time, in a very short amount of time. I'm not necessarily overly intelligent, but what I do have is I have a very good skill on how to figure things out, and I want to help you do that as well. So the question I ask myself is, if I figure this out so quickly, why do we see extremely smart, very well-educated people who have struggled with trading for over a decade, and they continue to fail? They continue to be break-even traders, or they have periods of profitability followed by huge periods of losses. They're constantly swapping strategies. They're just not making it anywhere. They're not making any progress. Why does that happen? And I'm looking back and I'm thinking about past students and people that I know and people who've contacted me in the past, and thinking about what is their top reasons that I see for failure. And I would say probably the top reason is the pursuit of the unicorn, the shiny object thing, the trade that doesn't exist, right? You go into this shiny object syndrome, we call it, where, you're looking around, looking for ways to trade, and say, this looks good, I'm going to go do that. And then you start trading it or doing whatever the process is, and you find out that, hey, this isn't as easy as I thought. And then you see something else. This looks good, I think I'm going to go do that. And you're going back and forth, trade hopping, strategy hopping, and trying different types of trading. And you get into this cycle where you just do that over and over and over again, and you just don't make any progress. I mean, yeah, you learn little things along the way, and some people get lucky and they break out of that, but there's a significant amount of people who never do. They just keep going and really never make it. And included in that would be back testing improperly or back testing with a misplaced focus. One of the things that happened, or a very large benefit that I had when I started trading, is we couldn't really backtest anything. I mean, we had option view analytical software. It had data for maybe a year. It was hugely unreliable. It was missing a lot of information, and a lot of it just plain wasn't right. It was pretty much useless for taking a strategy and running it through 10 years of backtesting. You just simply couldn't do that. Some of you may see that as a disadvantage, but I almost believe that had I come into the market today with the mindset that I probably had when I initially entered, which is the same that most people have, hey, I'm going to find this trade or this method or this strategy, and I'm just going to follow the rules, it's going to win all the time. Had I come in with that mindset and I got caught up in developing this unicorn strategy or trade, I might be in the same situation as a lot of people, right? Because it's pretty easy to go in and backtest something for 10 years and have it win, right? I can simply make up a set of rules and I can run it through backtester, and then I can fine tune them so that they didn't lose, which by definition is form fitting my strategy to the past. It's form fitting it to a past market. And then I can, from there, I can use that as confidence that my strategy is going to work in the future, which really, I know it seems maybe plausible that if you took something and you backtested it and you fine-tuned it to the past and you form-fitted it, that it's going to work in the future. But the reality is the past is not the same as the future. And the other reality is if you're just kind of modifying your rules a little bit to filter out losses, which is essentially what you're doing, you're not focused on how much risk was I taking in order to make that win. You're not focused on what would have happened had the market gone the other way or kept going a certain way. All you're focused on is the results that you acquired by filtering out the past bad circumstances. My point being is that strategy or those rules you made might work into the future, but they also might not. You really have no way of knowing. It all depends on what the market does and so forth. So what ends up happening is traders, they end up hiding losing scenarios in the trading strategies. In other words, they act as if, or they feel as if they fixed it. The trading strategy is going to, it won in the past, and therefore it's going to win in the future. They think they fixed it, and they put confidence, but they're not 100% sure, right? Because you're still kind of wondering. So you put your confidence based on what your recent results are. So you get into the strategy, you have a series of wins. Hey, it back tested good, confidence. Hey, I tried this for a certain period of time and it worked, confidence. I'm going to increase my size, confidence, right? Things go along, next thing you know, hey, a loss happens in real life. Something happens in real life. Something happens that wasn't exactly the same as the past, right? You can't filter that out in live trading. So you take this loss and you take it on much larger capital, and now you're back to zero, or you're back to barely any profits, or maybe you're negative. And now, since you've lost maybe once or twice or three times, now all of a sudden your confidence level's shattered. You drop your trading size and you wait for that to build back up again. And the same process, you just go through that process over and over again. You might do it with the same trading strategy, you might do it with a different trading strategy, but either way, the process is the same, and that process is flawed. You are never going to make it as a trader. You'll make it for spurts of time. It might be for a year, it might be 2 years, it might be 3 years, but you go through a 10-year period or so doing that process, you're going to continue, and you're running that cycle, you're just not going to make it anywhere. It's just not going to happen. So when we see these, like almost universally, I would say, when I see traders who are struggling with profitability and have been doing this business for a long period of time, that's exactly what they're doing. Now, they might be going from one income trade to another. They might be switching from short term to long term. They might be going from futures to this to that to volatility trading, but it's all the same, right? There is no difference. So we want to break everybody out of this this process. I want to do a shift in focus for our trading performance membership with the objective of drastically increasing the amount of time or decreasing the amount of time that it takes to reach a high level of competency with trading. And I'm going to call a high level of competency with trading is basically having being able to have and apply the necessary skills to maintain a high level of profitability into the future through the process of identifying market changes and dynamically adapting to them. To accomplish this, we're going to focus on the following areas. We're going to determine what we have for probabilities of price movement and implied volatility movement in specific time frames. So we want to take an example, and we want to say, this is probably what's going to happen. This probably isn't what's going to happen. This is, as far as price movement, as far as implied volatility movement. Also, we should add into that, and this type of movement, and if this happens or if that happens, that tells us something changes and what that means. Okay, but we're going to take these things and we're going to say, well, how are we going to enter the trade? How are we going to adjust this trade? And how do we want to exit the trade based on the probabilities of what's going on? And that is our, what is our entry configuration? How many days to entry do we want to do? What's our adjustment procedure going to be? What's our exit procedure going to be for this strategy? In other words, it's like M21 or what we talk about in Ultimate Income Trader. We're talking about what's going on, and we can just provide examples of that. And by seeing multiple examples, you'll get it. Then we also want to know how we're going to determine when those probabilities shift, and then we'll talk about adapting to them real time. We're also going to talk about technically non-subjective positions and how to manage those. So when we have the trades, I talked about this before, sometimes there's a high probability the market's not going to do something, or the high probability the market is going to do something. Sometimes there's really not a strong probability either way, in which case we default back to our rule set, right? So that's the wonderful thing about understanding your basic trade rules. You'll see me all the time. I'll go into a certain, I might go into a super bear, and I might revert back to M3.4U rule set at some point, right? We might flip it into an M3.4U and go into that rule set and trade that way. And then I might switch back into something else. But the thing is, when we go to no high probability of anything, we go into something we know that usually makes money. The only time it doesn't make money is if something really weird happens, and there's really not a high probability of that happening, so I might as well be in it, right? So there's nothing to take advantage of, and we can make money that way. The great part of this type of trading is there's always a way to make money. If you're directional and the market doesn't move, you can't make money, right? Here, we can make money if the market doesn't move. We can make money if the market's directional. We can make money, in either direction. We can make money if it's choppy. We can make money or whatever, right? Kiss of death on a directional trader is a choppy market. They keep entering trades and they keep failing. Again, we can trade all these markets, which gives us even more confidence, I guess, and flexibility when it comes to being able to make money, so which is really cool. And then, of course, we have the mental challenges and biases that prevent profitability. So I still want to deal with that. I still want to deal with some trading performance issues and mental issues as we go along, because you can have all the skills in the world. If you can't apply them, then there's no, you're not going to make money.